Hi, everyone. Dale Pinkert here at TradeGATEHub, powered by TradeView Markets, and our usually at a once a month meeting with Adam Button at Forex Live at FX Button _Button. Adam, great to have you back with a lot of the market action. I know you're a perennial oil bull, and I know that you're probably really kind of salivating at these price levels here at 97. I do think there's a shot for maybe 80, but I'm sure you're looking at this as a time to move in because no one's talking $200 crude anymore.
Yeah, you got to be a little bit cautious here. I see what people are worried about, and it's one thing I've been talking about, for a long time is China and COVID.
That's true.
It's spreading, right? And at some point, China either has to sort of admit defeat, somehow get on top of this. I mean, at 17 or 21,000 cases today, another day of records. And they had this bizarrely low number on asymptomatic, but it's like 300 symptomatic, 21,000 asymptomatic, which doesn't make sense unless they have bad tests or something else isn't adding up there. But they're shutting down a lot in Shanghai. It's going to wreck supply chains again. And if they live with it, then it spreads. People seem to be a little bit sick of it, and then it might spread. And China GDP, if it gets wrecked, then oil's in trouble. Second one is Iran deal. It does seem to be on the back burner right now. Iran, though, did say that they've got their production back up to pre-sanctions levels. So maybe the U.S. isn't enforcing them like they used to. It's maybe a bit of a goodwill measure that nobody's really talking about. So, and then, the U.S. side, I'm still very optimistic about the economy. Jobless claims today, the lowest since the 60s. So there's plenty of growth. Travel is going to be huge this year. I mean, try to book anything in terms of travel right now. It's impossible. So there's going to be a lot of driving, a lot of spending. And Russia is what it is. That oil's there. Ultimately, there will be less Russian oil coming into the market. And
I heard they produce less. For the first time in a long time, their production was off.
And I mean, eventually the storage fills up. It's tough to offtake it. I mean, you got to rebuild. Maybe eventually they can rebuild some of these supply chains, but at the same time, a lot of the technology know-how. I mean, they're pushing out all these companies that are drillers there, and obviously they're not working if they can't take money out of the country. So, it ends up like Venezuela over time, where production just starts to go down and down unless there's some kind of resolution.
Okay, so I wanted to ask you. I mean, currencies are your bailiwick. Okay, so we saw this tremendous crash in the value of the ruble post-invasion. Okay. I don't know if I'm getting live quotes on it anymore, but what does it say to a currency trader about the effectiveness of sanctions? And have you ever seen a currency both crash and recover so quickly in your entire career? And what does that mean? That Putin's winning?
That's an unbelievable chart. I don't even know if that's. I'm not even seeing it the same way. That's a weird chart. I don't even know if that's
I heard we're back down towards 85.
I got it at 76 here now.
That's what I mean. This one did not update. We're all the way back down to these levels here, Adam. Right. And this was before the invasion. This was the invasion day right here.
Yeah, it's been unbelievable. I mean, it shows.
What's it mean?
Listen, they have capital controls in Russia, so you can't take money out. So you got a one-way flow in. They've got a squeeze on gas, trying to make people pay in rubles. There's a lot of hijinks going on there. And so I mean, I've never, to answer your question, I mean, it's unbelievable. That's a 50+% move this month up.
I mean, when the lira had started to crash, it kept crashing for years.
Yeah, and it would bounce to 25%, here and there.
Yeah.
But 50% on a total U-turn.
I've never seen it. And look at all the gray hair I have.
I mean that
silver hair.
Trading a leverage trade on that, it's just insane. And there's everybody's caught in these Russian in hard assets, or even financial assets that they can't get out of these trades in the rubles. But I don't know if it tells you that much about really anything. But the flows
Okay.
are what they are. It's a current account surplus country. More
Yeah.
money comes in than goes out. So,
They're still selling oil, and
and we talked about, I think
China's
at
buying
various
it.
times in a commodity bull market, we talk about emerging markets as a monolith, but there are commodity importers that are emerging markets and commodity exporters that are emerging markets. So you have places like India, Turkey, that are huge importers of resources. And then you have in Latin America, Russia, these commodity exporters that are emerging markets. And it's two very, very different things in the current environment. And somewhere like Turkey is headed for more and more trouble.
I wanted to talk about what might be setting up as an important turn. And I recall that your seasonal work says that April is a negative month for the dollar, and it's only April 7th. And we did push up and finally took out this triple top, and we're diverging at the highs here, Adam. And, I'm wondering what you think is going to happen with Euro going into the ECB. Are they finally going to have to sound like inflation fighters next week?
The ECB is a disaster. It really is. I mean, all of Europe, including the ECB, I think they do have to. I mean, you got to maintain some credibility at some point. You can't just say, well, it's going to come back down. I mean, the Fed did that for a while, but at some point, the Germans are losing their minds here. 7.5% inflation, and the ECB at negative rates, and in no rush to move. But how far do they really get? So now we sort of priced in maybe getting back to 0% at year end, ending some of the QE. If you look at Italian bond yields, they're blowing up. I'm sure it's the same in Spain, Greece, the periphery. So that crisis is coming, right? You have a crisis coming, a sovereign debt crisis once again. And they haven't made the decision yet on whether to put the fiscal rules back in place. So in the Eurozone, everyone, they have certain rules that you can only run small deficits because they share the currency. You can't print.
Right.
And they're deciding whether to put those rules back in place for 2023 or 2024. There's some push for 2023. Eventually it'll get kicked, probably because of the war, kicked to 2024. But eventually that fiscal tightening is going to be dramatically bad for the economies. And you have the ECB then getting out of the market for bonds, and yields are just going to explode there. And that's going to create more fiscal tightening, right?
Yeah, that's certainly happening in U.S. Treasuries.
Mm-hmm.
In fact, they have a more negative looking chart than corporate and even high yield debt.
High yield debt. Bad place to be.
But look at this. Isn't this, you always said, quoting Adam Button, the biggest bubble in the world is the bond market.
It really, and it's look at what it's done since then. Well, look at what it's done in the last few months. And now the Fed's out of there. The Fed's finally got his thumb off the scale, and it's falling apart. What I'm really in the FX though right now, I don't know when that's going to unfold. I mean, it is the biggest bubble in history. Some air is certainly coming out of it, but yes. I don't know if that's maybe a 10-year story. I'm not sure it's a right now story. It might be.
Okay.
But I think the front end is really interesting right now, 2-year yields, because we got up yesterday up over 2.5%.
Right.
And now we're kind of back to 145. I think it was up 257 yesterday. That's real yield. Here. That's if you got the 10. Okay. In
Look
the
at
twos,
the 200 a month it's up against here. I didn't notice that till I just pulled it up. Look at that.
But 2.5% is real yield in twos. Like that's a decent. We've been talking so long. Why would anyone buy bonds? 2.5% in twos. I mean, yeah, you can clip your coupons in stocks, but 2.5% for a fund or whoever, that's not a bad place to park your money. And I think that puts a bit of a cap around there. Maybe it could go to 3.
Yeah.
But the last time we were at 2.5%, the Fed was at 2.25 on Fed funds. And right now we're at, a quarter to a half. So I think we got to get a lot closer to 2% before, and we're pricing it in. We're pricing in to move up to 3%. But I think we need to get a lot closer to that to really push twos higher. And then we're starting to see 10s are still staying pretty high, up 4 basis points today, 246, like you show there. And so we might start to see that spread, that inversion might be done here for now, especially the Fed now is going to announce selling. They're going to sell the long end too. So I think the front end is what moves the FX market. So,
Okay.
that I think in terms of the dollar, I think we can come back down here. And I think that plays into it. I think we might be near some peak pricing in of rate hikes too. I mean, it's fine and all to say the Fed's going to go to 3%, but what's the economy going to look like when it's at 2 or 2.5%?
What's more important, Adam? Rates being raised by the Fed, or them beginning to reduce their balance sheet, which is what Brainerd brought up this week?
Yeah, it's so gradual.
That's QT. That's QT.
QT, and it's they laid out the path now. I think you have to. That's going to be largely priced in. Maybe down the road they're talking about selling MBS. They're not really talking about selling bonds. And again, you're at some kind of real yield in the front end. Maybe the long end can go a lot higher. And then I start to worry about mortgage rates. Do you see this week a 30-year fixed in the US at 5% now? Yeah. That's prohibitive.
Yeah.
And then in high yield, right? I mean, these have got to.
There's high yield right here.
I mean, I don't know what those yields are up to now. They're still not very high. And
why are they acting better than corporates? Corporates made new lows. High yield did not at this point.
Just still that
strange to me.
Still that demand for yield, I guess.
Yeah.
But it is, or foreign money. I mean, you still can't get yield in Japan or Europe. So, ultimately, I think the dollar, we've probably priced in the maximum rate hikes right now. So what's priced in, people need to know, it's a rise up to 3% at the end of next year, or middle end of next year, and then coming back down to 2% into 2024 because it's too much, right? And I think the curve ends up being more of a gradual move up to 2% because we're pricing right now nonstop Fed hikes for a year. Tell me, the Fed has never been able to keep its nerve that long, a full year. Usually the hiking cycle will be 6 months, 8 months, and then they'll start to get a little panicky because stocks or whatever. And I think pricing in that Fed maintaining this kind of pace of hiking, especially if we're doing a 50 next month,
right?
I think it's too aggressive right now. And then, and if you look down, at least on the front end of the curve, I think it's all in there. And I think we've sort of hit the top. And that to me signals the dollar might be a little bit top. And you look at something like dollar yen, which is the most rate sensitive. It's
not making new highs.
It's not making new highs.
Yeah.
And,
that's a tell to me.
I mean, it's insane move in one direction.
Yeah.
And the other thing is, I can't understand. Maybe you can explain this to me. How is inflation only 1.3% in Japan?
I don't know. They import all their oil.
They import everything.
Everything.
And it just doesn't make any sense. And if they come back and say, listen, we've gone a little too far in the yield curve control, we've got to tighten up a little bit. This can drop a lot. If they, and that's what we saw in the euro. But I mean, Japan has a little bit more of a dynamic economy than the Eurozone.
One bullish argument that the euro's close to a bottom is, I follow EG. Okay, so EG after this, very nice move, and the lows were 82. And while the euro, here's the move, and while EG is retraced 61.8, it's showing more relative strength than euro because euro has retraced over 78.6.
Yeah, that's
so. Is there a little bit of a tell with euro digging in its heels against cable? Some of the euro crosses overdone to the downside.
It's a good point. I mean, it's certainly something to watch. I've been interested this week. Your UK stocks have been outperforming Eurozone stocks by a lot. And I think that to me says a lot about the economy, but that's an interesting chart. That's 3 higher lows.
Yeah.
And
okay. Well, I just wanted to see if you had, to me, do you pay attention? I tell people pay attention to EG, even if you don't trade it, because when it's going up, it gives you your preferred longs and shorts and the other way. You know what I mean?
Yeah. The other thing, the sterling has become such a proxy for the risk trade, like even more than the commodity currencies now. I mean, it's like a 1-to-1 relationship when it goes. So I think that could be skewing the signals there. I don't know. I think on that one, Dale, it's a good point.
Yeah. Okay. And there's cable. Cable looks a little bit more negative to me. That we could flush to new lows. We'll see. But I did want to move on to what, most people are interested in. And like you said, April's a great month for risk.
Not so far.
Well,
I
it's
get
early. It's early. It's
it's
the
early.
7th.
That's right. Well, I
Yeah.
kick myself too, because I mean, you got to know. I don't know if that's a front run in March, but at that
Yeah.
March lows, I mean, it's easy to do it in hindsight. But March low, you think, okay, it's March 15th. April's positive seasonally. We're way down in stocks, especially tech, and that was and it wasn't making new lows. I mean, it's all easy in hindsight, but then you
Right.
sort of front run that. Come down a little bit. I think even the NASDAQ kind of leads it all right now, right?
Right.
So the problem I have is I think tech is a mess. And I think, there's a lot of value elsewhere.
You know why, Adam, in my view, tech is a mess because you can't just say tech anymore because of the differentiation even within FANG. I mean, Apple still looks okay. But does Amazon? No. Microsoft was one of the stalwarts giving up. But you have some broken FANG stocks like
Facebook, right?
Yeah, Facebook. That's a broken stock. Google.
Yeah, that's
Amazon,
that advertising model.
Amazon, so you have some broken stocks in the FANGs, and they were the leaders.
And then, the pandemic stocks and what they did at Tesla, it's so volatile. And I mean, it's not how economically sensitive are these stocks really, right? So I'm a global macro guy. I don't know if there's that much macro I mean, there is to some extent, but the multiples they vary so much. What we saw in the pandemic, I mean, the payment stocks, the stay-at-home stocks, the Zooms, the Pelotons. So is there an economic signal in all that, or is it just about cheap money, or is it just about sentiment, options trading? I think it is. Yeah. So does it tell me that much about the dollar of the economy, or something that I can glean?
I mean, something is different. I mean, let's go back to Marty's why. As fundamental as don't fight the Fed. It's not the same Fed this year, no matter how long it lasts, than it was the previous 10. Okay, so there is a different central bank regime, don't you think?
No.
So
well, it is tightening. It is tightening,
Yeah.
and at the crest of that hiking is, I think, when you need to buy.
Right.
And I want to, if we go back to the real economy, and you want to talk about stocks, let's look at housing, XHB, if you can pull that up, which is a housing ETF, and it's been pounded.
It has. Because of rates, right?
Rates, right. And if rates have peaked, though, if rate pricing has peaked, I think people probably mistake, you say, well, you wait till the Fed stops hiking. Well, we priced in a lot of these hikes already. Has it priced in sort of maximum pain? And people, I think, see that 5% 30-year fixed. That sounds painful, especially with prices being what they are. Canadian housing bubble is popping right now. It is. I believe this is it in Canada, but Canadian prices are double what they are in US.
Okay. Well, God, how can people live there?
And the average price in this whole country is $850,000, 1.6 in Toronto for just the median price.
Yeah.
Oh yeah, condo, like a 2-bedroom condo in Toronto is 1.2.
Yeah.
So that's a different story. But I think in the US, I actually listened to Kramer before, and he said he called, nobody loves Kramer, but he said he called the heads of he has a lot of access. He called the heads of the big home builders, and they all said it's fine. He said the problem is at the high end. So the 2 to 5 million, he said, is slowing down. So maybe that's more sensitive to stocks, right?
Okay. Interesting.
And because if you saw Restoration Hardware, or RH as they call themselves, they were talking about a big slowdown in the last month on their conference call. But so Restoration Hardware is like ultra high-end furniture. So that sort of fits in with that narrative as well.
So it's finally time for the wealthy to feel a little heat.
Well, that makes sense, right? With tech and stocks. I mean, and so I don't know I think housing is a buy. So I'm a big lumber bull. That's really come down with that as well.
Okay.
And then, metals, copper, but that feeds back to China. So,
yeah, that's what I mean. I just want to pull up copper since you brought it up. I'm bearish copper. Now, I've never seen people as bulled up in commodities since I was a teenager in the 70s. No, I was older than a teenager. Anyway, but one thing about copper, it doesn't come from Russia. I know there's a lot of demand for copper, but there's no supply chain issue with getting copper. And if we're going to see a slowdown, maybe that's what the housing stocks are saying. I think copper looks vulnerable, and not for the end of a bull market, but for a healthy correction back under $4. I think copper was one of the strongest commodities, even stronger than precious metals, and this looks like distribution to me up here, Adam.
right. And it's you know what? I'm sympathetic to that whole line of thinking, whether it's
And
oil,
it could be China
or copper. Yeah,
Yeah.
China. That, and I really believe in a lot of these commodities, whether housing, right through all of it. But do we get a correction here?
A breather.
And if we do, it makes it even more bullish down the line. Even if oil comes back down to 80, these guys and copper, they're thinking about new mines right now, and they're thinking about new oil production. People are thinking about putting money, and if we get another flush, I think that pushes it out another 2 years. And if you look at copper supply demand, the mines, the grade is getting worse and worse, and it takes 5 to 7 years to build a mine. It takes 2-3 years at least for an offshore oil project. If we push out these investment decisions, it makes it tighter down the road. So I would almost welcome that sort of correction, because I think it puts the market, it makes for an incredible trade down the line, which I think is probably what's happening in housing right now. Got a little too bulled up, pulling back, and then we sort out the supply chain issues and realize, wow, there is a lot of demand there. And companies, they're willing to build, but they aren't kind of willing to build right now, right? Because you can't get the parts, you can't get the labor. Right. So maybe we cool things off, and then go, and it could be China that does it. It could be rates. I don't think it's going to be rates, but that's why I'm watching China so closely.
And thank you for pointing that out to us. The last 3-4 months, I was thinking about you during the Olympics. I go, well, how is it not going to spread, even though they had such a tight window there in the Olympic Village, just all the people coming and going. So anything else you may want to wrap it with here? Any view on precious metals? Have been sideways for quite a while.
Yeah, I mean, we really double topped that in gold, isn't it?
Yeah.
I mean, there's a lot that argues for gold. We talked about the geopolitical implications in Russia, whether there be inflation, safe havens. Again, I just think, okay, we'll buy it when it hits 2,100. I mean, do I really need to catch this first, $100, $150?
You want to buy the breakout over the double top.
Yeah, if it comes.
Okay.
And other than that, I think we're into this mode right now, from watching inflation now to watching the economy. And I think it's boomerang back. So inflation we know is high, and maybe it starts to level off, right? So the month over month numbers slow down.
Right.
And it probably will take another couple months before that starts. But then we see, okay, how's the economy handling this? How's housing handling 5% rates? How is consumer spending transitioning from pandemic to no pandemic? So we'll see a lot of worrisome headlines about goods spending. We're already starting to see it in furniture, maybe start to see it in electronics, Amazon. But, does that just transition to services? Because you can't book a hotel right now. You can't book a flight. You can't book anything. So is the spending still happening?
You're giving me claustrophobia.
Yeah,
I can't get out of here, huh? I'm stuck in California.
There's worse places.
Yeah, so this is really a grand experiment by Jay Powell, isn't it? And from yin to yang. And do you think he's going to be able to generate a soft landing, or we won't even have landing gear by then.
Who was yesterday? B of A saying 350 basis point hikes in a row. That's going to be a hard landing if that's the case. I think the Fed ultimately, we'll probably get 50 this time, and then maybe they slow it down, because I think they're going to look at the market and say, you know what, the market's done a lot of the tightening for us here. Yeah, we can't invalidate that. We can't lean too hard against it. But if we, we work the yield curve by selling off the long end, maybe we can take our time and see how this goes rather than, 50. So that might be the message at the FOMC, and that cools things out. Or maybe they only go 25 and said, you know what, we're just going to bang off 25s for a while. It might.
Well, I heard they're more S&P dependent than data dependent.
Well, so it was
Peter
funny.
Bookfire says that.
In the minutes yesterday, it said we're watching closely financial markets and the economy responses. It's funny they put financial markets before the economy.
Yeah. The wealth effect, it could work in reverse. If you see this, Adam, the weekly S&P chart. So we rallied back to this horizontal resistance and a little over 61.8. But if this is a failing rally for 2 and we're about to see 3 and take out 4,100, we could trade in the mid 3 handle here. That's when the Fed might begin to slow down.
Oh, no. What's your read on sentiment right now?
It's mixed. It was real net. No one wanted to own stocks down here at this low, but this was one heck of a squeeze.
Oh, yeah.
So, we'll see if that alleviated it. The bulls would say this would be a good pause to refresh and hold about 4,400 and then resume the uptrend. So I think we're going to know pretty soon whether this is going to hold and then we get a new high, or it's going to fail. And I think starting to close under 4,400 would not be a good signal for it.
I would agree with all that. You can't be too confident in anything right now. And that's kind of the other signal.
Yeah.
I had a ton of macro confidence coming into the year, and then, war, rates, inflation, rate, supply chains, nobody knows. We look at Shanghai shut right now, and I saw a survey of 163 American companies. 90 or 95% said they're affected by the lockdown there now. Imagine that spreads. And you can see the shipping containers or the ships lined up outside of Shanghai that aren't moving. It's headache on top of headache, right?
You're not the first one to say that it's hard to get kind of a long-term narrative going, easier to trade the quick, 2-3 day moves, the scalps, harder to wrap your head around larger narrative. So go with what works. Scalp, trade, and you don't have to figure it out. You do the right thing today, Adam, and tomorrow takes care of itself. That's
a great point. And these moves don't seem to be 1 or 2 day moves. A lot of them, they're 5-6 day moves and nice solid trends. So
yeah. Well, I appreciate your time again. And 40 years old, Adam became. A happy birthday to you, Adam. I hope it's your best year ever in all ways.
Well, thanks so much, Dale. That's feeling old.
All right. Well, have a great weekend, buddy. Thanks for giving me your views. You crystallized a few things for me, and I was looking for this, some of your seasonals to work. And I think a very important point was if we get a breather in commodities and maybe it lasts until July, to get ready to back up your car to buy everything.
Yeah, that's great. That'd be probably my strongest message too. So,
okay, buddy. Adam Button at Forex Live, everybody. Hope you enjoyed it. Thank you, my trading warrior brother. Adios.
Thanks, Dale.
Thank you, Adam.
Oh, wonderful, Dale.
All right, bro. I told you it'd be a good one.
I got a little bit deep in the weeds there, I guess, at one point.